Hello, good afternoon. Welcome to day 57 of our 60-day trading challenge. And today also we closed the day by 11:15 itself in the morning. And now actually I'm recording this video at 2:15 p.m. That is when the market is still working. And obviously, since we closed the day, you might have understood that either it is a no profit, no loss day or a loss making day. So it is an indeed loss making day for us. We took the two trades today. And in the first trade, we lost and we exited because of the ORB breach, and the trade ended in a loss. And the second trade, which is supposed to be stop and reverse trade, was not a long trade this today, but it was a short trade. But again, since the entry candle low got breached, we had to exit that second trade also with a minor profit. Although our intention of the second trade is always supposed to recover the trading loss of the first trade and the total trading cost. But today we could not achieve that objective, so we could exit the trade pretty early. So let's see what happened. In fact, today would have been an avoidable day to trade because whenever the market opens gap up, massive gap up, that's over 1% gap up or a gap down, it is always we generally try and avoid taking the trades on such days, but just to ensure the continuity of the challenge, but not as an excuse, but it is a valid input for the aspiring traders to avoid the intraday trading on such days could be a good idea. So let's see what happened despite whatever we did since we took the trade. Let's talk about it. So at 9:46, that generally 9:45 sharp after 9:45 we would have taken the entry, but we were still in a bit confused state to take the which side of the trade because it was a bearish trade, and already market had opened sufficiently gap down. The probability of further fall was bit low, so we were, that made us to think for a while. A minute more it took to decide and press the sell button. And then at 9:46 we sold the 24,800 call at 105 rupees, and then we had to cover this trade at 10:26. That's about less than 45 minutes we were in the trade, maybe 40 minutes or so. So that is because, as you see here on the right side of this chart, whatever I'm projecting here is an index chart. This is the candle on which we entered, and we had marked the previous to that. This is the candle which is high, and we added couple of points more over this as a factor of safety. So this is the level which we had marked, and as you see here, this is the candle, not the rectangle marked candle, but that's the entry candle. So sorry, exit candle. The one candle prior to that. This is the 1020 to 1025 candle. As you see, it closed above the marked level, like as you see the above the whatever the level we had marked. So that is why at as soon as this at 10:25 candle, the candle closing time is 10:25. We closed this trade at 10:26. That trade, and we were supposed to take the stop and reverse trade, which is supposed to be a long side of the trade, but the India VIX was not supporting in for a long trade. You might argue that okay, the super trend and all yesterday also I had mentioned, since the super trend was positive, we took the long trade. Today the scenario was a bit different. We need to understand the contextual scenario. So here it is the day, and opened at a spike was there, and there is a gap up. It opened the India VIX, and then if you see the India VIX, 6% up as of this moment, as compared to the previous day. So, and further going up was a possibility, no doubt. But as you see here, by 10:20 or something like that, it had already started either a sideways kind of a thing. So we anticipated it could cool down after such a spike. So we didn't wanted to take a long trade, and then that is why we then took the basically another short trade. Obviously, it should have been the opposite direction. That accordingly, we sold the 24,300 put, and here you might see the 24,800 multiple trades. So we'll not talk about that because they are not relevant for our strategy. Like they are against another trade, so we have taken multiple trades. So you will not discuss about that. We will stick to these two trades only, the MIS orders, which are of which pertaining to this particular strategy. So then it comes to 24,300 put is what we sold. So I'll put it as 24,300 put. So if I see the 24,300 put at 1027, as soon as we exited the earlier trade, we sold the 24,300 put at 80 rupee 30 paise, and then we covered it at 11:15 a.m. at 76 rupees. And the logic for exit of this trade again is going back to the here with the next to the for the next trade, our entry candle becomes a reference candle for as a ORB level. So that low was our we had marked this candle low, and that remained the as it is. The previous trade's high was the low for the current trade. And as soon as this candle, the 11:10 candle, that is 11:10 to 11:15 candle, closed below this level, we just exited this trade because there could have been a possibility that it would have further fallen, but it did not happen. So we now it is easy to say, but when you are taking the trade, you will not know what will be the behavior post that. So that's why this is the candle. As soon as this closed below, we exited the trade, and apparently, as you see, this is the candle of 11:10 to 11:15 candle. And as you see here, this is the place where we had entered, and this is the 24,300 put thing. So 1026 we had entered, and then in this level we exited. Had we remained in the trade, we would have made more money here. But that is we cannot anticipate the market. We just need to follow the rules. And accordingly, we exited at 11:15 and at 76 rupee 10 paise, which means we made a minor profit in the second trade. Our objective, ideally would have been to recover the entire trading loss of the first trade and the trading cost, but that did not happen. In short, we ended the day with about 1441 rupees loss for the day, and that brought down our ROI to 18.76%, and also obviously our equity curve got a dip from its peak as compared to the earlier. Like this was a peak, and then the peak it got a dip. So that's it. It was a difficult to trade. It was a difficult day to trade, even the gap up or a gap down, massive gap up. As I said, like over 1% gap up or a gap down happens. It is always difficult to trade, but we managed to close the trade in a reasonably decent manner, and then. That's it. So as I have already communicated earlier, next week could be a challenging day and challenging for continuing the remaining 3 days of this challenge. To complete the remaining 3 days of the challenge. So we might do it week after the next. So because next week I have a lot of commitments, and potentially I might take a trade on Monday. That is so that the 58th day may get over. But I'm not too sure at this point of time. If I take the trade, I'll post it. Otherwise, the remaining 3 days will be the week of 23rd June. We will be continuing the challenge. So that's all for now, and have a great weekend, and also have a great week ahead next week. And see you probably either on Monday or on 23rd, again on a Monday of 23rd June. See you. Bye bye. Take care. Thank you for your continued support. Bye bye.